Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning. Oh my gosh, my camera's not working here. Hold on. There we go. All right. Well, guys, it is Thursday. We just had news here. Once again, I'm like way behind. I even thought that like I was going relatively fast through breakfast, but I don't know, right? I must have spent too much time in the shower. US PPI month over month spot 4 versus the expected spot 2. So that means that some of those more volatile like autos and so forth are a little bit higher than expected. But the core PPI month over month is in line at spot 2 versus the expected spot 2. We also got US initial jobless claims, 242,000 versus the expected 220, so 20,000 higher than expected. And the overall result here has been that the treasuries have moved up a decent amount. But is it enough? I don't know. And I don't know if those numbers are really going to move things a whole lot. But where are we at? So yesterday we had the CPI and we had a similar reaction. And that was washed out. And then at the end of the session, they kind of like gave it up. And now here in the overnight, we have moved down even further. So very curious here in the treasuries. A pretty strong downtrend having developed this week. S&P 500. Well, they liked the PPI yesterday. They're not reacting so much to the PPI. Maybe even kind of not liking it. Oil's another little bit of a jump yesterday. Not completely out of this range from 71, but that's looking pretty good. Gold and silver. Well, they're finally taking a little bit of a break here. That higher high looks awfully nice. Copper is a little bit higher, but starting to develop a new range here. The yen. Okay, so the yen looks like it has stabilized a little bit, but the yen has been on that downturn along with the treasuries. And the dollar continues to look really, really strong. We got Bitcoin. It's still where it was. Well, actually, no. They were able to take 100,000 again. So it's actually maybe significant for them. And kind of one of the things that I'm seeing, Gbox asks, so minor inflation. Yeah, I would say like minor inflation, but those like that headline number is not as important as the core number. I'm trying to remember because it's different. It's different between PPI. It's excluding food and energy, essentially. So I think it's saying, I think it's coming from energy being up. Yeah. But the core is the same. The core is the one that really matters. Yeah. And is probably why the treasuries are able to bid here, that it was in line. Like what I'm seeing generally is that the probability that the Federal Reserve cuts interest rates next week is going up and is pretty much settling on they're absolutely going to do it. But then when you go further out and you start to look at like next year, there was a point at which they were saying that the Federal Reserve was going to cut 6 times. And now they're saying like 2 times or something like that. So they're basically saying that the Fed will be able to bring interest rates down 3 more times before they will have to pause, is kind of what the market is pricing in at the moment. And that might be why you're able to see, okay, like the Federal Reserve is going to cut, right? But the longer term look of it is they're not going to be able to cut very much, is kind of what it's saying right now. Now, I'm concerned that when you come into January and February, that you're going to see a major change in some of the numbers. Like, I think that you might see a big jump in jobless claims in January. I think that the next few jobs reports are probably not going to look as positive. So all of that stuff, all about what the Federal Reserve does could change. But in the short term, this is what the market is doing. And I think that this is largely driven by anticipation of what Donald Trump might do when he gets into office, right? So that's kind of what's moving us right now. Now, in terms of for us, yesterday we caught a pretty good trade taking the long. This one, I'm not so confident trying to ride with. And in fact, I'm almost wondering if we should look for the reversal or not today. I don't know. I do kind of feel like that being below yesterday's levels just seems a little weird to me. Just maybe a little bit too hawkish to me. So let's give it some time. There was a decent amount of volume long on that though, so they could go more. All right, let's see what we got. Oh yeah, there was that. Oh man, so yesterday somebody asked me about like a particular strategy or something like that, and it was French. The thing that they sent me to was French and 2 hours long, so I didn't watch it, but I need to keep that up. Usually what happens is I'll keep the tab open and then come back and look at it every day and consider if I want to close it or not, and then after like a month I'm like, I'm never doing that. What about option expirations? Well, let's see here. We're getting close to that, right? Oh no, it's next week. Option expiration is next week. So I don't know. I'm not very good at following the options, to be honest with you. I feel like that there could be a lot of really cool live tools that we could use to help us gain insight into that world, but I just don't have access to that kind of data, unfortunately. Octavius took a long from it. Okay. So yesterday, we did a little bit of back testing. We tested, okay, if you take a completely random entry, like you just pick a random time of the day each day to take a trade and you make it random, whether it's going to be long or short. And instead of taking it like right then at that moment, you instead put in a limit order several prices lower. What happens? And we found that it didn't really help like the overall like profit of the strategy, at least over the 100 iterations that we did it, but that it did seem to persistently increase the MFE and MAE that you got. So basically you would only get the fill if there was a relatively high amount of volatility. But some of the results kind of suggest that like, well, the best thing though is to just take it where it is when you get a signal. And I think from the perspective of like scalping, short-term trading, day trading, and order flow, doing order flow and you know, predicting future orders. If you've got something that predicts future orders are coming in, you get in as soon as you get that signal that those orders are going to come. I've been trying to sort out, you know, trying to find that extra little something to kind of assist us, because there's always these issues like, okay, I get in, like what my stats suggest is that I'm actually getting pretty good edge over the past 2 years in terms of getting in when something happens, and I get a lot more favorable excursion than I get unfavorable excursion. And I'm also able to use the multiple contracts to really give me the ability to like let it ride and reach and all that. But I'm not getting my profits very good. I'm not getting the profits very good. And so it's like, how do you deal with that? And the things that I'm trying to do to like protect those profits, they don't seem to make a difference, at least in my testing. And I'm kind of running out of ideas. One of the things I was thinking about this morning, John Grady, he really rides his trades with, you know, like I think that he always tries to let it get like the 2 ticks favorable or something like that. And then once he's done that, he has to stop like right there. Like if it comes back even 1 tick, he's taking the profit on it. And I don't like how does that really actually work? Because I would think that a stop that close would just get hit way too often, you know? Yeah, John Grady. Yeah, I don't know if you haven't seen, he's the no BS day trading guy. But anyways, I was kind of sorting that one. I was like, well, you know, we could do an experiment, but on that one, if it's a random entry, I don't think that you're going to get very good, you know. I wonder if I need to do something like, okay, after the fact, go and identify the best flows. Like situations where the treasury, it moves and it's moving on volume, and you know, it's a long persistent trend, really, really good sort of a thing. And then run the best way to take the profits on that, on something that's already been filtered down to the actually correct trades. Maybe it's that the incorrect trades, they're introducing too much noise for me to be gaining anything from, like, what is a good exit, you know? Implement the COT. You know what? So are you referring to the number that you get in Gomi's indicators? So if you're not familiar with the history of this, Gomi was the first one to come in and be like, hey, you know what? Like, hey, all of these things, like whether the orders are market orders or sell orders, is super cool, but you can't really reconstruct it historically. But actually, I think that we can. And so he was the first one to make something that using the tick replay that would show you that. And there's this little number in his kind of like footprints stuff and everything called the COT that I don't fully understand what he's calculating it. It kind of seems to me like it was a leftover piece of information that, well, I don't know what this actually is, but like it's there, and so we're going to show it to you. And then people have tried to I've never really seen anybody like really actively trading it, but every once in a while that one will come up. Oh, you're talking about the COT report? Well, okay, but how is that going to help us with a short-term trade? Because you only get that one once a week, and by the time that you get it, the data that you're getting is already old. So I would hope I don't know. That is something that we wanted to do a little bit of investigation on. So I was going through this yesterday because I had the next big thing that I was doing. Well, one was the fair value gap indicator. I created that. It was not that interesting to me. I guess we could put it in the next release of the suite. I don't know. I don't know if anybody really cares. I'll stick it in there. I'm not going to bother like documenting it and everything right now though. And so then the focus was going to be like on some back testing stuff. But I tried just 2 ideas yesterday. They were really short ideas. There was also, there was something that I remember reading, and they did a bunch of different tests and stuff. And I remember thinking it was interesting and like I needed to go back. But when I went back and I read through it, it was actually like, no, didn't really help. And his back testing really was like on daily bars. That's one of the like the really big challenges, is that most of this stuff that you're going to go and read out there, like there is actually a decent amount of books and so forth, people talking about quantitative technical analysis sort of things, and that they really believe in that stuff. And the issue is that they're doing it on daily bars. It seems to me that like momentum is an effect that you see on daily bars, but those methods don't really work on 1 minute bars. Like it seems to me that like a 1 minute time price series is not really very useful. But I digress. So I kind of went through those, and then I was like, okay, so what next? Well, there is the better zigzag thing. But I'm also kind of wondering if I need a little bit of a break from that. And so I put on my list here, there's the Rust learning stuff, there's the machine learning pipeline. But then you just reminded me of a couple of other things. So one is seasonality indicators. So we need to have an indicator that tells us how many days till expiration, for instance. And we need to have one that tells us how many days since the beginning of the month and how many days to the end of the month. Business days. Some of those are actually going to be complicated things. like calculating when the rollover is. That's another one. The rollover. I don't know. I think that if you already have an instrument, I think that there are things in NinjaTrader that will tell you how many days till rollover. But if it doesn't, then that's going to be a real pain, because it basically means I have to go in and code the rules for when that instrument rolls over for like every instrument. What a pain in the butt, right? Okay, but we'll put those on there. Seasonality indicators. And then the next one would be yield curve momentum strategies. And I don't know, this one might be kind of like way down the list. This current is kind of becoming bigger than current now all of a sudden. Yeah, yield curve momentum set and back testing, COT reports, etc. Yield curve is just BS. No, it is not. And in fact, okay, so you can go in and you can say, is the yield curve flattening or steepening over the last X time period, and then take certain positions based off of that, swing positions based off of that, and it's a profitable strategy, or so I've been told. that there's like studies about this. So of course, then there'd be all sorts of what would you add on top of that to really give you a good edge. But apparently there are some strategies that you can do that are as simple as what direction is the yield curve facing. So I want to backtest that. Though those are probably longer term ones. See, like here I have backtesting. It should actually be. Oh, see, I have some of these things on here. I should have backtesting long term and backtesting short term. So here, this one right here, wait for a pullback. That's the one that we did. Inventory cost basis, optional logging. Oh, I think it did that too. So, right. The short term is, I think, collect more data and then start to implement AI stuff. But I think that seasonality indicators goes before this. Yeah. So we need to do more research about data lakes to see if I know a bit about data lakes. I've been doing a bit of I was doing a bit of research about that at the role that I was at like 2 years ago, and they were starting to implement a data lake. But I haven't really done a whole lot of looking at, okay, what are the specific technologies available, and would they really actually provide value to us or not? So then we'll look into a data lake sort of a thing. So I'll put that in there. But I'm wondering if now is a good time to start binging on content about Rust. What is the coding? Oh, this is just my to-do list. This is just my to-do list because I get all of these ideas and I forget about them. I'm kind of realizing I think that I've been stuck in a little bit too much of a wanting cycle, for lack of a better word. So you gotta understand that I have a unique relationship with getting things done compared to most people. Because when you're ADHD, you know, the issue is you have all of these ideas and then you lack the ability to persist long enough to like complete them all. And then when you do complete things, you don't really get the same kind of feeling of satisfaction, because it's like you'll get dopamine in anticipation of completing the task, or that like I need to complete the task, and then you complete the task and that feeling goes away and it feels good. And I don't get that. I don't really get that very much at all. And so basically my whole life, it was basically just learning to complete things based on discipline. And so because of that, I have the ability to persist in things without reward much more than the normal person. In my view, at least that's what I think about myself. And the problem with that is that if you get into this cycle where everything that you're doing is just off of discipline and you're not getting anything from it, that can be really exhausting, especially if you are finding things that are generating that dopamine, that are like, you know, I need to do this, I need to be better at this. And there are some days when I'm going through that really hard, that I just feel so tired. And I think that there are days when I spend like the whole stream talking about things like that, because we'll get stuck into, oh, here's what we need to do, and then I just get stuck in that kind of thing. So I'm trying to, okay, let's keep track and keep organized here and talk about what we're going to do next, but also not go into that kind of wanting dopamine cycle. So I'm considering that maybe Rust will be the next kind of major project that I pick up. We'll see. We'll see. I'm going to save that. Yeah, Trading Academy, I did not have time to look at that video yesterday. Because it was French, and I, you know, it had to do like the auto-translate, and the auto-translate wasn't... I was like, I'm going to have the focus for this right now to read. So I still have... I might be able to do it this afternoon when my wife comes back. She's on a work trip right now. Speaking of which, I should pull out the baby monitor here probably. At some point. Okay, well, meanwhile in the treasuries, we had a pullback. They didn't quite make it to like rebalancing things for the market makers, but it was a decent pullback. We're right back up at 23.5. I don't know if I should read that like too significant, but that does put us at the point where, okay, so we kind of saw what happened off of that initial thing. Now we can kind of think about what's next. Now it's a little bit more of an interesting space. We're hearing some stuff from the ECB president. Pop over here, Reddit. Do a little bit of, is there any good information for us this morning? So Zero Hedge's headline on producer price inflation is that producer price inflation comes in red hot in November. Oh, is the ECB president, they're doing their press conference right now, aren't they? Yeah, what asset? I do most of my trading in ZN or in the 10-year. I'll do it in the micros. But if I'm doing a sim trade, and right now because I'm between jobs and everything, I've been only doing sim trade. Which is kind of a shame because we've been doing pretty okay with some of these. What about the terminals? What do you mean by that? I mean, like a Bloomberg terminal? I would love to have a Bloomberg terminal, but we can't afford that. But yeah, when I do take live trades, they're usually in the micro 10-year. Well, let's read a little. I'm not going to read these whole articles maybe necessarily, but I want to get like a flavor for what they're trying to say. Following yesterday's reported reignition in consumer price inflation, despite people seemingly being exuberant that it was quote unquote expected, We don't remember the Fed's mandate being stable prices in line with consensus expectations, ? This morning's producer prices were expected to accelerate further, also to 2.6% year over year from 2.4% year over year, but it didn't. Headline PPI surged 0.4 month over month versus the 0.2 expected, the biggest jump since June, which lifted the year. Yeah, but that's like mostly oil. Right? Oh, or food. Headline PPI's big jump was driven by food costs. Okay. So that's important to note. Services costs are accelerating fast on a year-over-year basis, and energy's deflationary pressure is evaporating rapidly. Wow, yeah, the food costs are crazy. Given the resurgence in money supply, it should not be a surprise that PPI are on the rise again. Does that look like an inflationary backdrop that needs a rate cut next week? I think it does, actually. So I think that reducing interest rates 25 basis points is not necessarily going to have a significantly measurable effect on inflation increasing. But what it will have a significantly measurable effect on is employment. And I think that employment is kind of like on a ledge there, that if you were to leave the interest rates exactly where they are today for long enough, like for 6 months, and then I think you'd have a recession. Because the labor market is really tight, like excessively so, problematically so. I think that you know, because most people have jobs right now. I think that people are kind of being a little bit complacent about the job market. What risk reward do you trade with? Well, so oh, you know what? Actually, I was gonna do a back test on this. Shall we do the back test on this? This was one of the things that I was thinking about yesterday. Generally speaking, within the parameters in which most retail traders are looking at, the risk reward ratio that you're looking at doesn't really matter. It's really more of a psychology issue, because what happens is some people will use really low R factors. That is to say that their losers are like 2 times their winners, for instance, and you'll win most of the time and you can feel great about everything because of that, right? But when you lose, like, you lose big, and there's like a real far left tail, and basically what happens is that far left tail comes along and destroys you every time. But when I was reading the thing from Davey, and of course he was back testing on like daily bars, but he was finding that, you know, he also found what I did, that the risk reward didn't really matter. But there was an aberration once he got to the 0.1, where like your winners are like 1/10 your losers. Then he started to see some things. So it's like it's just like it has to get wide enough for it to work. I don't know. So I was always like, I would only go as far as like a quarter. I would only go as low as 0.25. And now I'm realizing, oh, like I should try much more extreme than that, and see if I can get it to really show that far left tail sort of a thing. So, how do I want to test this? Well, it's going to be an optimization, but I'm wondering if there is a one of these strategies that I've done before that. Well, so what was Degenerate Gambler? Oh, yeah. No, this is totally perfect. This is totally what we want to do. Let's just run this once to see if it's working. You know, I might not remember the state that the strategy was in when we left. I got something else I can show you here, Monica, on risk reward in a second. Okay, so I think that's okay. Oh, except for that, like, it's terrible. The trade is terrible. Stop 1.2 and target 0.8. Why don't you have a pullback setup with news? Oh, we could totally do that, actually. That's not a bad idea. That one would be a little bit of extra work, though, for sure. What are we getting here on average trade, winning trade, and losing trade? No, that's not what we want. Let me bring this down. So we can see. Okay. Degenerate gambler. Range along. Wait, where is it getting the range? Multi-ATR. Okay, so it is using a percentage. And range along is based on the daily. Oh, it is the ticks per day. And then there's volatility. So if I put the stop at 1.2, then that's basically the average, the daily average true range times 1.2%. So then how come the average winning trade is only 4 ticks in ES? That doesn't quite fit, I don't think. Well, let's pull out our output window and kind of putting in a little bit of a thing here. Calculation mode dot ticks. You do copy here. Yeah, double my stop equals and do the same thing over here. Oh, I was expecting stuff to print out, but I didn't put the print statements in there. Like, how come it didn't work? Seth, because you forgot the most important part that actually prints it. Are there any mean reversion models? Well, so when you're talking on like daily bars, there are definitely things that I'm familiar with in mean reversion. Supposedly on short time frames, there should be a lot of mean reversion, but I have not been able to find, like, again, a strategy where you just have a 1 minute chart of the S&P 500. I have not ever found one that's really successful over, you know, basically. So like the challenge is you're using 1 minute bars. You have a back testing period that's 5 years or more. It's, yeah, I haven't found one that's worthwhile. The ones that I found that you know, show promise always are incorporating something additional, like order flow, some other piece of data. See, it's taking like four ticks. That's not correct. What is stop set to? 1.2? See, so I add oh, now that's interesting. What is the higher time frame? 5 minute. I have a 5 minute bars, and then I have a daily bars. Period is, maybe the period is bad. 15 period. See, that's just doesn't fit. I'm doing something wrong. There's something, I think that I originally designed this to work with the treasuries, and it's just not carrying over to ES. So let me come back here and change it and see if I put it on the treasury and I run that. Does that like look better? The fact that it, under the parameters that I have, that it's losing is not necessarily what, it does not necessarily bother me. What bothers me is that like the average winner and average loser is only 1. Yeah, but it's doing it on ZN as well. So I think that there is like a huge flaw. Like I must have left this back test in like a really bad spot where there's like some default setting in here that's not very helpful. So, by the way, on this discussion that you guys are having in chat here, do not do it risk reward. Don't express it as risk reward. It's just not a very good. What you should put it in R factor. Which is your average win over your average loss. Okay. So when you come in and you saying your risk reward is like 1 to 5, right? Or 1 to 10. What you're really saying is your R factor is 0.1. Right? So, and what I'm getting at here is that R factors less than 1 have fatter far left tails. That's like the statistical consequence of what it does. You have a distribution, right? You come in and this distribution is the average profit per day. Each one of these is you know, okay, I didn't make anything, then I increase this bucket by 1, okay, and you get a distribution, right? When you take the skewed risk reward, what you're essentially doing is you're kind of like taking your finger and you're pushing in this distribution, and you're saying, I'm going to push more days into their profitable situation, because basically what's going to happen is most of the time you're going to win, like 99% of the time or something like that, you're going to win. And when you don't win, those losses are 10 times larger. So what you're essentially doing is when you push all of these over, the consequence is that, okay, so now you have something like this. Now you've got a lot more stuff over here, right? But then you have a left tail that's like this. It's like 10 times, like it goes off the screen, right? So you're going to have a day, or it's possible for you to have a day that you lose so much in that one day that it just dwarfs what you make from over here, right? So that's the first problem with the low R factor trade. The second problem with the low R factor trade is that it conditions you into the, like, only making money from risk. So you're going to win most of the time. You're going to think you're a genius. You're not really actually getting accurate feedback from the market about whether or not the thing that you're doing actually works. Like, probably you're just making money off of taking on risk and the volatility in the market, right? So you're going to have problems there when things go wrong, because you're not, you know, you've never had to deal with losing, so your mentality is just going to completely fall apart. You don't really know if your edge actually has edge, so you might end up wasting a ton of time on something that really honestly doesn't work, but you think it works because you're taking so much risk on, right? So what you really should do if you're a beginning trader is you should go for an R factor of 1. Equal risk reward. Your winners are the same size as your losers, okay? And then whether you're winning or not is going to be much more a factor of how good you're actually trading, how good you're actually executing on your strategy, and whether your strategy actually has an edge to it, right? Once you've established that and you really know what you're doing, then you can go in and you can do things where you can, like, really amp up your risk. Because what you're going to see a lot of people doing is they're taking these really skewed risk rewards, and they say that they've been making money for a year or two, and then they just completely blow up. It's extremely common. It's extremely common. So you gotta be careful with those. Okay. I think that we might be able to show that with this backtest, but I gotta figure out what I did to this backtest, why it's not working. Okay, so I have in here multi-ATR range type ticks, multi-SPR, and then this is on a 1-day bar. So if I come in and I add chart of yes on a daily bar, okay, so here's our daily bars, and then I'm adding on it the multi-SPR or multi-ATR, and I'm doing a period. Well, here I'll do 14, and the range type is ticks. Okay, and the answer that I'm getting is 201. Should R factor be a percentage? No. I just represent it as a... So here's why you want it to be decimal, Monica. The break-even win rate necessary. So the win rate necessary to break even on that strategy is equal to 1/1 plus R factor. Okay. So if your R factor is 1, your winners are equal to your losers, then that's 1 over 1 plus 1, which is 1/2, which is 50%. Ta-da! What if your R factor is 0.5? 1 over 1 plus 0.5. So 1 over 1.5, which, you flip things around and everything, it ends up being 60%. So to break even on that strategy, you would have to win 60% of the time. And generally speaking, what you will find is that the strategy will tend to go towards break even. So like if you have a win rate, or sorry, if you have a R factor of 0.5, you will tend to get a win rate around 60. Now, but again, remember that there's a fat tail to it. There's usually streakiness. So what will actually happen is you'll start trading it and you'll trade it for a month and you'll actually find that your win rate is something like 70%. And you're like, oh, okay, so that must mean that there's some real edge to this, because if it was break even, it would be 60% and I'm getting 70%, right? But then what will happen is one bad month will come along and then you'll come back to that 60% win rate over the longer run, right? Or to put it another way, if you were to graph your profits, it'll be like this, and then gadoosh, and be like this, and gadoosh, and this is where you get these people that it's like, yeah, every 2 years they blow out. Okay. So I think that what we can do is we can show that if you really take extreme R factors, that there's something there. And then at that point, the question would be, can you avoid the fat tail? Do you have ways of realizing that you're in the fat tail and avoiding it, right? Okay. So this multi-ATR ticks 14 just does not quite work. Just does not quite fit. There's something wrong here. I wonder if I come into chart. Okay, chart, it doesn't show it. Maybe I can add chart indicator range long. Because on ES, I should be getting an answer that's closer to like 200. By the way, the treasuries have come down almost completely. Okay, so that is not actually working. That ATR that we added on there, it's adding the 1 minute. So what's with that? Add data series, higher time frame 8, add data series, bar type 1. Why is it not adding the data series? So here it has an indicator on there. Let's see, it's passing 1 minute into it. What's with that? Oh, you know what? It is not an ATR of the daily. Let's change it. No, it still is not right. It's a very, very interesting because surely it worked at some point. Why is it? And I've done things like this before. Why is this strategy not successfully is it successfully adding that? Well, okay, let's do I hate to do this while I'm collecting data, but it's really bothering me now that it's not working. So we're gonna come in here into the end of all this, debug. Catch the process. Run. Bars array. Come on. It sees 3 bars. Not that there's anything in them yet. Is it because I'm doing this in the configure? Let's try that. Yep, it doesn't like that. That's kind of what I thought it was going to do. But most of these other strategies, I think I add stuff in data loaded, don't I? Yeah. Oops. Had an equal sign there. That did something different. Man, where are you? Oh, I see.
Connection lost.
I'm doing some things on this that don't make a whole lot of much sense. I don't think that this strategy ever worked. I think that we must have started working on it and like I had problems with it and then I gave up on it. And then like the stream ended and I forgot about it or something like that. So here there's the volatility. And we can get rid of that, right? By the way, when we put this on here, we don't deal with the have to have minimum bars to trade. Okay, so let's see. Okay. There we go. And the risk that it wants to take is now very, very different, right? Yes. Okay. So now what is happening is, I think what's happening here is that the threshold is not. Oh, what actually is my setup here? If the high of 0 is less than the high before that. Wait. Oh. It's looking for an inside bar is what it's doing. It's saying if there's an inside bar. I thought that Degenerate Gambler was using the Fourier. Does it not use the Fourier? Well, maybe that was like my intention. Oh. I see. Public void trade inside R. Foyer. Read foyer. Should probably recenter these things. Okay, so now we're going somewhere. And position dot the market position equals market position dot facts. So it will not take a trade. That this prevents it from this changes it from being a sort of thing. So like you have a strategy that's like you got this thing and it, like entries or exits, you're like always in or something like that, and you sort that out. Like that works on like higher time frame sort of things, but on a short time frame sort of a thing, that might not necessarily be what you want to do, especially with what we're doing where like we're just like explicitly taking on risk. So I only want to do, like, I want to be in something and then I want to stay in it until you get stopped out. Did that not change anything? Oh, did I not build it? I did not build it. That's why. I'm like, that looks like what it was before. Better. Oh, interesting. Oh, you know what? Okay, yeah. Let's... Do that. Was it doing that because like it basically anytime that oh my gosh. I think that what it was doing is it was saying anytime that it was actually wanted to take a long, that the trend was too strong and so it was never trading longs. I think that's what it was kind of saying. A little concerned that like it shouldn't take this long for it to run. That was not it. See, it only took 3 long trades. Enter long. Trump just said something about cryptocurrencies. Is Bitcoin jumping? And not anything too crazy yet. Crypto, you know, like sometimes it moves on stuff, and I'm like, what is it? You never know. And then there's things that like breaking news that I think it should move, and it doesn't do anything, right? That tells you what's going on over in there in crypto. Oh, maybe it's because... No, but that wouldn't make sense either, because... Why is it not taking longs? That is actually really, really bizarre. The ones that it does take are like really big. These down here, that's kind of more like what I would expect that to look like. But... And the graph performance seems, you know, a little closer for what we're going for, but there's still some really major issues with this strategy. I'm still kind of like trying to sort out why I built it the way that I do. Threshold is rising. Let's see if it has something to do with one of these filters is messed up. I doubt it's the R2 filter. Tell me, is BlackRock going short this market? I've got to know. No, it is really a more of a money management company. They don't necessarily like explicitly go long or short a market. That's not how BlackRock works. Okay, let's look at the analysis on this one. Yeah, that's kind of more what we're going for. Why is it that the R2 is the thing that changes that? Oh. So the R2 threshold, it's saying that that there can't be there has to be a certain amount of trend in the market. It doesn't like it, and I see what's happening. And the reason it was taking like so many trades before was because it would basically take the loser over and over and over and over again in like a tight market. Okay. So now that we get that, now we can kind of come in here and mess around with some of the parameters that we actually want. So the winning trade and losing trade and all of that sort of stuff. So with the way that I'm doing this, I have the stop and the targets are set. And I'm using like a daily range. So oh, I see. Let's change this back to the 5-minute bars. And okay. Win rate on it is just not quite what this should normally be. That's probably because I need to optimize the threshold a little bit. Okay, so we're going to change some things here. Just a little bit more flexibility. Then when we come into here, oh, it's our friend from Korea. Came to say hello again because I only tell the news. The leader of the second Democratic Party, Joe Cook, got arrested and was sentenced in prison for 2 years in his third trial. Well, I really think it's crazy to put one party's leader in jail. It is, but you know, obviously there is some situations where maybe somebody is guilty of doing something. I kind of doubt that that's the case in this situation, right? and all that happens like all at once. Like, how did that happen so quickly? That's so weird. Okay, so the daily ATR period we want to be 14. And the short ATR period, we want to be a 10-minute one. And the long ATR period, well, I kind of am like, why am I putting it on like the higher time frame bars thing? That doesn't really make a whole lot of sense to me. I think I'm going to get rid of that. And I'm going to say the longer ATR period to be 200. That's what I'm going to do. So we're going to get rid of this higher time frame nonsense right here. We're also going to get rid of the variable for it. We're going to past Seth. I don't know what you were thinking, but I don't like it, and I'm changing it. So range short and long will both be on this, and this will be on this, okay? And this will be daily ATR period, short ATR period. Oops. And you have to type period out there. And long ATR period. Okay, how good did I do there? How many errors did I make? Only one. Only one. Okay. If current bars of 0 is less than long ATR period, return. Current bars of 1 is less than daily ATR period, return. And we don't need this one anymore. Bada boom. Okay, it's a little bit better. Not a little bit better, but like it's doing a more equal risk reward. Number of trades is still a little lower than I would like, but it made changes. Okay. So now what I really actually want here is I want my target to be 0.4 and I want my stop to be 2. Really crazy risk reward. 75%. I was expecting it to be a little bit higher than that. So what are we getting? It's on average going for 4 ticks. And the loser is on average 20. Well, I wanted it to be more extreme than that. Okay, that's a little bit more like it. 4 and 40, 10 to 1. Except for the win rate on it isn't very good, is it? No, sir. But now that I've got it managing the risk more the way that it was originally intended, we can do some optimization here, right? And the FT threshold bit, this is where we can go from -6 to 6, an increment by 0.5, I think. So what I have found is that the FT threshold kind of shifts over time. So like you have to do a walk forward optimization. Like you run it on a few days, figure out what the current FT threshold is, and then you use that value for a month or something like that. There we go. There we go. Okay, so this is kind of more like what we want to see, right? See, so if we were to draw a distribution of this out, maybe we could go and graph it. We could like take this the data in this and put it into R or Python and then start drawing graphs for us. But the distribution is going to look something like this, right? Like most days we are profitable, but like the days that we are profitable, there's actually a really long right tail, which is this thing right here. So that's actually really good, actually. But there's too many of these sorts of things, right? So that's where we could like maybe you say, hey, if you've lost more than 40 ticks in a day, then you don't trade. You stop trading, right? And then that would cut those off. Hopefully it doesn't cut off any of your winning days. That would probably outright increase the profits of the strategy. But what we're getting on the cumulative net profit is pretty close to like what I want to see, which is like generally over time, it kind of makes money and then like it'll just like kadoosh. Okay, so I would like it to be more extreme than that. I really want it to look like this. Really want it to look like this. And I really want it to look like this. Like it should be straight down. It should be like all in one day. Okay, so now another thing to come back here. Oh, okay, so first thing on the FT, their properties that you pass into that, right? Fourier period, Fourier period. And what am I using for the Fourier period? 120. Now that's very curious. Okay. Because the other issue, or the other thing that we can do here, ooh, actually, this is a really interesting thought. Okay, so I added this bit in here to say, like, you have to be flat for it to take a trade. Otherwise, it'll stop in reverse. So we can try that. But I'm thinking, what if I did something like, it will only reverse if it's in a profitable position. Now that would be interesting. We can do that. That would be a little bit more complicated, but I think we can do that. But let's, for now, I need to, oh well. I hate when you have to when you have these and statements, you want to be able to comment out a line. That kind of means that you need to have the last one is always good. Otherwise, because you can't have an and at the end of the last one. Oh, actually, you can. Seth, you can. You can do this. True. You do it like this. You say true. So, and true. And true. That allows me to just comment out these two lines. And I would add an and this. Seth, you're losing your cleverness with age. That made it a lot worse. Actually, I'm surprised that the one that worked, still ended up taking about the same number of trades. That's curious to me. But what FT threshold did it want to use? It was using 6? Huh. Oh wait, am I optimizing on the right thing? Yeah, probably not. Fix that too. Yeah, in my own trading, I'm getting like 1.5 to 2. So like I'll make like 10 ticks. Or sorry, I'll lose like 10 ticks and I'll make like 18, 15, something like that. But we're trying to build something degenerate, right? See, that's why it's called Degenerate Gambler. You get me? With that 1.5 to 2. So there's one issue with it right now, which is like it's going that much my way, but I'm letting it come back on me too much. Okay, but with all of that said, so like my MFE is really high, as if you know what that means. But I'm getting a win rate like 55-60% sometimes, right? So I'm actually having, if you look over the last 2 years, I have both a good R factor above 1 and a win rate over 50%. How am I doing that? Well, so I'm using another trick. The other trick is I'm using multiple contracts, right? So I'll use multiple contracts. I'll take short profits on the first ones of those. So in order for me to like stop out and come out at break even, it has to go back against me actually a decent amount. And then that allows me to take on more volatility at that point, right? So I am taking on more risk, but in over a very limited time frame. And so it kind of helps me avoid some of the issues that you get with the far left tail, right? There can still be a far left tail, but to get that far left tail, it has to be a situation where it's like I'm getting stopped out of the trade immediately every time, persistently. That would be the situation where it would hit the far left tail. And it's only 2 years, so I don't know. We really need 5 years to see, right? What's going on here? Yeah, if you lowered your R factor to increase your win rate, would you just not scale percentage-wise to grow your... I'm not sure I understand what that question means. If I said, hey, I'm always going to take the equal risk reward, then presumably my win rate should go up. I think that for me, it probably wouldn't change too much though. Because the thing is I'm not just trading off of watching what the data is doing and yada, yada, yada. Like if I get into trade, I have a really good reason to think that it's going to go my way. And they tend to be pretty accurate. And in fact, the thing that's funny is that there's a pretty large portion of those like 40% losers that actually are winners, but you know, I just wasn't able to hold through the volatility of it. So, but this is like, there's news breaking. There's, you know, like there's real things going on that I know which way it's going to go. You know what? I don't like that I'm doing it to 6. I want to keep it to a much more limited. So the way this works is that you kind of get this oscillator that goes like this. And like the bigger of a swing it is, the more the oscillator goes like that. So like if I'm going for 6, then it's really only catching it when it really makes a big shift. And I don't think that that's what we want. So I would like it to take more trades. On this one, what does it come down to? Oops. 4-year period. FT threshold -5.5. Oh, because I still had this. You know what? Let's really curve fit this. You gotta be careful with, you know, you have a lot of parameters for your strategy. You can mess around with the parameters until you get something to work, right? But for some reason, I have the period all the way up to 120, and I'm like, the amount of risk that I'm taking on, or the profits that I'm looking to catch on those is like on a period way less than that. And so I'm kind of sitting here going like, am I doing something where like, you know, I'm looking to catch these and it's actually trying to catch these, you know? Who brought up delta? How do you measure C view delta? You're just bringing it up on your own. Okay. So in Jigsaw, you can use their Vista charts, but I would recommend like using the power bars. This is like you're just using Jigsaw, and then you can come in and you can see, okay, what's the balance between buyers and sellers since I've like gotten into a trade. Or if you pull the power bars that come off of the reconstructed tapes. No, not that one. This one. You can turn on these short and long-term ones. So I can say, what is it over the past minute? What is over the past 10 minutes? And yeah, pretty good. That's what I'm using is I'm using a NinjaTrader indicator that I created that kind of gives me the same stuff. So what I think might be happening here with my FT threshold is that it's overfitted. Yeah, I think it was overfitted. Well, but it still came out to 170 on the 4-year period. And -2 on the FT threshold. Well, that's interesting. Maybe it just doesn't work as well. This I had this set up from before, and it, you know, I had a really good backtest with it. It was like one of the better backtests. Well, let's back up a little bit. Let's kind of start over to an extent. So here's the ES. And I think it's a 4-year series analysis, is it? Yeah. 4-year series analysis. There you go. And by default, it's using 20. Fundamental cycle period. Plot rate of change. That's another thing you can add on there. And it's saying use like 170. Yeah. Versus like 50 would make more sense to me. Five is probably like way too. Yeah. By the way, in here. Cross above. Cross below. Negative F2. Yes. Yes. Okay. So I think that I want 50. See, you get this issue where, like, okay, you know what we should actually do? Instead of optimizing for max net profit, we should optimize for max gross profit. Can we do that? Yeah, see, it's taking us into the 9s. Oh, do I still have... Oh, I do. No. That's objectively worse. I don't know why this is just not... It worked really well before, and maybe the market has just changed, but I'm just not getting this thing to perform. I think this is what I was having issues with before too, though, was that it just didn't quite do what I wanted it to do, which is probably why I told it to like look for an inside bar and then just take a trade with in line with the trend. And I'm not necessarily pulling out, like, I should use super smoother for this, and I don't know. Okay, so let me show you something else. Yeah, it was definitely a cyclical in. I need to go back and look at some of this guy's other stuff, because I really think that there's some cycle indicators that we can kind of use, and if you're just taking on a risk, you should be able to sort something out that's really degenerate. Oh, you know what? Let's try one more thing before I move on. Where's the strategy analyzer? Random trade. Seed from 1 to 100. And the stop. We gotta double check a couple of things. Oh, okay, yeah. It just limits it to a time of day. That's all. Reward factor 0.1. 0.1. Stop. You can do 20 ticks, sure. Now let's do bigger than that. Let's do 40. Now let's test it. Let's make it between so it has to be at least 10 ticks. Between 10 and 100. So no, abort. Need to increase that by 10. I don't want 10,000 runs of it. That'd be bad. That's more like it. Okay, so, interesting. Okay, so here's what this is doing, okay? It's literally taking a random trade, but with a certain like risk reward profile. So what did it come out to? What did it like the best? The stop? Oh, basically the biggest one. That's funny. Of course it's the biggest one. Okay, but we can come into here into the optimization graph, and we can look at. Okay, so the seed. So you can see basically it's trying each seed a bunch of different times to see which stop works the best for it. Turned out to be 80. Okay, and then the stop. So we can see here that generally speaking, using a big stop is better. Okay, so let's do this again so that I can show you directly. So let's just always have the stop be 100, and we'll do this from 1.1 to 1. Increment it by 0.1. That should give us about the same number of iterations. Yep. Every time, by the way, every time that I see your name, Monica, I'm like, so I had a friend that was named Monica, and her last name started with an S. I'm like, every time I read that, it makes me think about that. I'm like, no, probably not the same person. But okay. Insufficient data. Oh yeah, because we need reward factor here. Okay, there we go. Interesting. Do I need to go more extreme? Maybe we do know each other. Are you? She was from Arizona. Are you from Arizona? We really want to do it this way? I think so. Always curious about what you do. No, I'm not sure what you mean. Okay, this is 0.1. Interesting. But with the way that I'm doing it, it's like basically the target gets smaller and smaller and smaller, and so like the net profit gets smaller and smaller and smaller. But do you see how like it's like this? The slope of this bottom part is good grief. Slope of this bottom part is a little bit more extreme. Yeah, she didn't answer it. That must mean she's not from Arizona. Either she is and now she's messing with me, or she's not from Arizona. It's super interesting that how easy it is to get one that like has a really good net profit. Actually, did we look at? We didn't look at that one, did we? Oh my gosh, yes. Okay, see, this is what I'm freaking talking about, right? Right? It wins most of the time, and then voodoo. Now this one is getting lucky. You gotta understand, it's getting lucky, right? We just change all this stuff. 0.1, 0.1. Let's do it a little bit more aggressively here. Optimization graph. Nothing. Yeah. Okay, now what we can do is we can increase the number of seats. Yeah. So, nodes. You see over here, there's 20,000 ones where they lost 20K. So like the most that anybody lost was 20 and the most that anybody won was 16. Right? So if you graph out the distribution, you get a Gaussian distribution like this, where the tail on the left is longer. Okay. Now going back, well, and it probably doesn't matter because Monica's leaving, but so we went and we made a survey. We made a survey and we said, okay, like what are you using? almost 68% of people said that they were using price action. What are things that you intentionally exclude? For some reason, people didn't think that Elliott wave analysis was very good. Most of these people were futures traders. Equity index traders, 87% of them were equity index traders. Okay, then it started asking questions like, how many trades per day do you take? Most are 1 to 5. What is your typical win rate? Well, it was pretty well distributed. But then when you look at what is your average payoff ratio, average winner to average loser, and you have a lot of people that are at 1, you have a lot of people that are doing like 1.5 and 2, and then you've got these people that are like down at 0.5. How much experience? Most people are in the 2 to 5 years range. How many accounts have you blown? 0. Okay. 49.3% considered themselves profitable. So this was like after 5 years. Oh, so there's some bunch of people that say that they've made profit after 5 years. I think that those are lies, but so there's the statistics on it. I bet you. Let's move this back over here. Let's open the chart again. Yes. But this time let's do it on a daily chart. That's not bad. It's unfortunate that it's kind of a little bit slow on the draw on that one. Oh, that's not what I wanted. These bits are not relevant anymore. Those. These bits aren't relevant because it is going to just be straight up always in the market. Oh, I put that in the wrong spot. What does it not like about that? Threshold we're going to set. Oh well, yeah, let's do set it. But the threshold in this case is going to be 0. Oh, that was wrong. Right. So we need a trend filter of sorts. Let's just do SMA short, SMA long, underscore short equals SMA of 50 and long equals SMA of 100. For now, we'll just say if the 50-day moving average is moving up. It's taking a little bit longer than I thought it would. Okay, that's not that good, actually. That's not that good, actually. Am I doing this right? Yeah. No. Which is which? Indicators. Fourier series analysis. Plot, rock plot. So when the red one goes over, then the next bar should go in. Right, when the red one goes over, then the next one it should be going in. Right. Well, it's taking way more trades than I thought it would. Interesting. But with the filter bit, it's profitable, huh? Hmm. Does seem too sensitive. Oh, that's the results of this are probably going to be pretty okay, all right? 13,000. Well, that's not amazing. The Sharpe ratio on it is terrible, actually. The Sharpe ratio on it is terrible, actually. But there's enough there that, hey, you go and you run it across a universe of instruments, that might actually work well. NinjaTrader really needs this thing that allows you to, you know, change the instrument. To say, select all. Oh, wait, what? I can do that. Futures. Tunisian. Wait, I have a list, though, that's more than that, right? CL. But there's not, like, corn. Well, there's wheat. Oh, let's just try it. Well, now that's a pretty big discovery on my part. And I feel kind of stupid that I didn't know that. Not stupid, but like, because probably most people don't know that. But I feel like that's something I should have known about. Now it's probably taking it a while because it wants to download the data for all of those different instruments. So it might take a while. Or maybe something else is going on because that window don't seem too happy. Is it taking up all my memory? No, it's not too bad. Oh. I think I just crashed Ninja Trader. Ah! Okay, Ninja Trader's still there. It's definitely unhappy though. Abort! 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 I'm gonna wait for it to respawn. Abort! Guess not. Ninja! Should we try it one more time? I kind of want to try it again. Maybe over a 5-year period instead of a 10-year period, but... So here's the strategy analyzer. We're gonna do a back pass. We're gonna do daily Fourier. And we're gonna do day bars, 1 day bars. We're gonna go to 2019. 2019. We do want to include commissions and all of that. And over here on the instrument, we're going to use all futures. Run. Maybe the multi-instrument testing is just borked. I don't know. Well, it's doing something. It got further than it did last time. It got further than it did last time. I kind of think that it's just that I don't have the data. And, like, probably when I request that much stuff, like, probably my broker kind of, like, throttles it. That would also be something that maybe in more recent versions of NinjaTrader are changed. Oh, 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 oh. Combined, it's a loser. Huh. Interesting. Really worked well on gold. What the heck? Oh, because gold did so well at the end of here and it was long on that. Ah. Dude. I'm liking this. Wait, how come the daily... Oh, because, you know, it doesn't take a ton of trades. So, when I come back to the combined... Oh, I can't do analysis on the combined? Boo. Really, Ninja? Come on. You give me the stats, but you won't allow me to come in and do, like, the, you know, the analysis bit of it? That's so lame. But you know what? We should be... Oh, can I? I can't even come down and do trades? Boo. Okay, so I would have to come into each one of these into the trades and, like, export the trades. And then I could go into other software and generate better graphs and statistics and stuff. So that's a big deal for me because, you know, I had been doing some testing and so forth, and like oh boy, but you know, I was doing it with Python, and you know, we had to get special data for it and all of these sorts of things. I can do it in NinjaTrader. And the thing is that I'm not even telling this to manage risk, which is to say, like, I could come in and say, like, I start with $10 million. I size each of my positions based on the volatility of the instrument, all of these sorts of things. So if I add that stuff in there and make it like an actual legit CTA strategy, I can just do all of the backtesting in here, and that opens up a whole another world. So now I can just deep dive into that. That is so cool. Now I need to make a better list. And you have to deal with these things where like correlated instruments and things like that, right? But that's really something else. Now this is interesting. When I'm looking at my cumulative delta over here, it's saying that it wasn't collecting data from 7:30 onwards. Really? Really? Oh, it must. Oh no, it must have been not collecting data because probably NinjaTrader was not connected to the data. Okay, well that's bad. My bad. Well, look, they came back to unchanged. I think that would have been a trade for me because I was a little bit skeptical about like, why is this one holding and the other one wasn't? But I don't know if I necessarily would have caught it. Yeah, you definitely have to size it because, like, look at how much it made on NQ. Right, like it's not adjusted, and this might actually be profitable if it's risk adjusted, because like it lost a ton on YM and FDAX. And then it's kind of like, well, but why would you want to do NQ and ES, right? That doesn't make any sense because they're correlated. You'd only want to have a position in one of them. So, yeah. And there's no loss-taking strategy in there either. It may actually be a really effective strategy. But before I get into that, I have to go back and do like the base ones. I have to do like, okay, I buy, well, okay, so there's buy and hold the S&P. We already have that. But then I have to do simple time series momentum. It's probably, oh, you know what though? It's not going to be sophisticated enough to allow cross-sectional momentum, unfortunately. Well, actually, you probably could do it though. You wouldn't do an instrument list. You would just add the data series to the indicator itself. This brings me back to the whole thing that's like, what, we should have a trading platform that allows you to use Python. All right, guys, I'm going to get going. I'll see you tomorrow. I have a lot to think about.